back. Let's focus on a metal company as well. Let's talk to the management at Midhani. Sanjay Kumar Jha is now joining us, Chairman and Managing Director at Midhani. So if you talk about the earnings, great set of numbers coming in, sharp uptick seen in net sales, profit has nearly doubled. Of course, there will be an impact of the lockdown that you had in the last year, same time. But apart from that, can you talk to us about the run rate?
As you have seen, we have got the best ever performance in our turnover, and we have also had a best ever operating profit has gone up by 24.5%. PBT also is 12% higher than the previous year, and earning per share is also highest from the last year, 8.532. 532 we have got 8.88. And these are all the changes we have got in this also, as you have told rightly, that we have achieved this performance within almost, I can say, in 3 quarters. Because first quarter almost we have lost. We had a lockdown of 45 days, then it took some time to restart and then slowly come to the full scale of operation. And also we had some little bit disruption in between also. So with this performance, it is quite happy to announce that the company has done exceedingly well. And it is mainly due to the change in our processing technology. We have done some lot of changes in our operating methods, and where our R&D and technology, they have done a wonderful job by modifying certain process where we are able to utilize our scrap, and and by that we have saved a lot of imported materials which are supposed to be used for the same purpose. So this is mainly due to the change in our process and technology. And more than that, the entire Midhani workforce, moment they have come for the operation or even for the other activities, they have contributed their full potential, and that's why we have done the performance which is best ever in spite of the impact of COVID in the 2021.
Hi, Ms. Dr. Jha. This is Mubina as well, joining into the conversation. I remember when we spoke last as well, you've been really investing, like you as well mentioned, a lot in your operating methods and changing the way you manufacture your goods, which has helped you save on buying imported materials as well. You've been utilizing more scrap. So if you could just tell us a bit about that, what kind of cost savings has that brought about? Ordinarily, to produce what you have produced in Q4, how much would you have imported and how much have you saved instead?
If you see our raw material consumption from 1920 compared with the 1920 for FY21, you can see that almost our consumption of raw material has come to almost 50% of that. And also it is also the fact that our VOP also is slightly less by 200 crores because of this pandemic. In spite of that, in proportionate, our raw material consumption decrease is very high. We have got even the VOP reduced by maybe around 24%, but our raw material consumption is less than 50% from the previous year. And which is mainly due to we have a lot of scrap which contains very high value metals, which includes cobalt, nickel, molybdenum, and those metals are very costly, and also we have to depend entirely on import. So direct saving is there as far as those metals are concerned. In place of that, if I am using the scrap which contains these metals, it has given us a lot of benefit in terms of a good saving in the raw material side.
Well, yes, cobalt, nickel, molybdenum, these are ordinarily materials that are not available in India, and that's the reason why companies like Midhani have to resort to importing it from abroad, which obviously then leads to higher cost of production. Now, what's also interesting is the pricing, Mr. Jha. We've seen a lot happen in the commodity markets recently. You've made some very smart changes in your processing technology. What is the scenario on your average realization or your average pricing? If you could give us a check of what's the value mix and the volume mix like now?
This year, if you see our total is whatever sales we have made, we have almost around 42% we have given our sales to space. Is one of our major customers. Defense, it was last year, it has increased from 17% to 26%. So in defense, our contribution has gone up as far as our sales are concerned. And also we have certain amount of increase in the area of PSU, which includes even the defense also and energy sectors. And export, there is a significant change. It was 1% of our turnover the last year, that was in 1920. Now this we have increased to 2% in spite of getting 14% growth in our sales turnover. So with the 14% growth and then export going by almost double, this is also a good sign that we have our product mix, we are increasing and we are moving to the different areas. When I was talking about the PSU, which also includes, we are also getting some orders we are executing for the railway also. It's very well notional, but we have started. So what I say is the company is also diversifying, as has been told earlier also, and results are coming probably in our next financial year. You will see more and more contribution coming from our non-mandated sector also, and it's a good thing for the company to grow. So entirely not depending on the space or defense or say and aerospace. I would also like to tell you now the aerospace also is increasing. So whatever I have told about this, the PSU percentage has gone up from 11 to 23%. It also includes our contribution in the aerospace, because we normally supply those materials to our sister concern, Hindustan Aeronautics Limited, gone for the aerospace applications.
Okay. Right. So, sir, just to clarify, now your contribution from space is 40% and from defense you have increased it from 17 to 26%. What's the margin contribution like from these different segments?
Margin configuration for space and defense is more or less same, in fact for PSU also. But of course, in the export, when we are going for export, our margin is less. And also, there are certain areas which includes energy sector. There also, wherever we are bidding against the most of the tenders we are getting under competitive bidding, the margin definitely is less. But overall margin, whatever we have the potential to improve our yield, recovery, and reduce the process loss, I think that is a lot of ample opportunity for us to improve the margin, even if we are getting the orders on competitive bidding. So company has the potential because we have a wide variety of product mix. So where in any area, and these are all niche materials, where if you are able to get better yield, better recovery in your operation and reduce your consumption of, let's say, in the raw material, power, fuel, it is definitely going to give you a margin, and that's why our margin is ongoing on the slightly on the higher side. But if you see on the PAT this year, from the previous year to this year, the PAT to sales, we have slightly less value compared to the previous year. So it is not that we are keeping the margin always on the higher side. There is a stress on that also, and mainly
Right.
it also on the operating
Okay.
efficiencies.
Correct. Dr. Jha, actually we are a little short on time, so we're going to have to wrap it up. But thank you so much. Interesting to see how things are changing for Midhani in its internal operations, in its order book as well. We hope we can speak with you on the next big development on Midhani's end. Thank you so much for joining us. Quick break on this.